order block is a price level where institutional traders has made a previous large orders, okay, either buy or sell, okay. Yeah, so if they make a large order, what happens is that the next move of the candle will be an impulsive move or a momentum candle, okay. That is the only way you can identify an order block zone, okay. Anytime you see a momentum candle or an impulsive move candle, the candlestick behind it is an order block, okay. And an order block is being treated as support and resistance zone. An order block should have a momentum or an impulsive move, okay. So let's say this is an impulsive move, okay. The candlestick before the impulsive move becomes the order block, okay, or the candlestick that caused the impulsive move becomes the order block. All right, so behind the impulsive move there should be an order block, okay, and this is the order block, okay. And we say the features of an order block is to act as an order block acts as support and resistance, okay. It acts as a support and resistance. The same way, if you find your support and resistance zones, you draw your key area, okay, or you demarcate the area. The same thing you have to do on order block, okay. Once you find an order block, a valid order block, you have to demarcate the zone, okay. Wait for the price to come back to the zone. All right, when the price reacts towards the zone, then you make an entry. But before that, you need to make sure that the order block, okay, there is a momentum candle, right. Make sure there is a momentum. The second thing is to make sure that the order block, okay, from where the order block is going, okay, there is a break of structure. All right, there is a BOS here, okay. Why is it important for us to have a break of structure here? There should be a break of structure because a break of structure signifies a direction, okay. It signifies a direction. All right, that is why we need a break of structure. So when the break of structure appears, okay, now you can clearly say that the price is in the it's making advance towards the direction. All right, either bullish or bearish, okay. Let's consider this as bullish. All right, we consider this as bullish. So if this is a bullish order block, okay, it means that since there's break of structure here, the price signifies a bullish direction, okay. So even if the price is going to retrace back to the order block zone, all right, the order block has a higher potential of rejecting it. Why? Because the price is in a bullish direction, okay. Had it been that there is no break of structure here, that means that the price is not making any attempt to move up. All right, so if it's coming down, it has the ability to break this easily. Break of structure simply means a sign of direction, okay. So if you see the break of structure above, it means that the price has indicated it's or has shown an interest of moving to the upside, okay. So now if the market begins to retrace down to your order block zone, it shows that here confirmed that even if the market is coming down, it is showing interest of moving up. So this is just going to be a retracement. Now we have seen two features here, right? We have a momentum, okay, a momentum candle. Now we have a break of structure, okay. Let's simply say that. Let's simply do it this way, okay. Let's simply do it this way. Let's say that the trend is just like this, okay, coming down like this, okay, okay, and from here begin to move up. All right. So now from here to here is a break of structure of let's bring it here. Let's bring it here. Oh my goodness, what is this? Okay, let's bring it here. All right. Okay, let's bring it here. So now the price is giving us higher low, lower low, higher low, sorry, lower high, sorry, lower high, lower high, okay, lower low, lower low, lower high, okay, lower low. All right, this is market structure, okay. Now market gives us a break of structure here, okay. BOS. All right. So now market is giving us lower lows and lower highs. Okay, lower lows and lower highs. Okay, and this point, market breaks the previous what lower high. Okay, with this a moment with this momentum candle. All right, and behind a momentum candle we have what an order block. Okay, so this actually makes it a valid order block. Right. So now we have a momentum candle. We have what break of structure. What else do we need to see? You can also call this, okay, you can also call this change of character or market structure shift, right? No issue. Since I made this a downtrend, that is why you see this as what change of character. What are the features? We have break of structure. We have what a momentum candle. What are the two? It should be in a key area. Now listen. An order block should be in a key area. What is a key area? A key area is a zone where market has rejected several occasions. Okay. Now, from this zone, okay, once you find your order block, all right, you have to check the extreme left. All right, check the extreme left of the chart. All right, see if that zone there's rejections there. All right. Now we have one rejection here. Okay, in the zone, the same zone. Okay. So had it been that we have another rejection here, okay, another rejection here, this rejections is going to what? Make this order block solid. All right. This rejection here is going to support the order block. Okay. But if there's no rejections, okay, let's assume there's no rejections. Okay, let's assume there's no rejection in the zone. Okay, it is very easy for the price to break it down. All right, it is very easy for the price to break it down. Why? Because there's no rejection here. There's no support and resistance that is supporting this. All right, or there's no support here that is supporting the other block. All right, and in the market, whatever happens in the previous time has the higher potential of what repeating itself. That's what basically the market is about. Okay. Whatever happens in the left side has the potential to happen at the right side in the future. Okay, so if you have multiple rejections here, okay, it is believed that when the market gets to the same zone, it can repeat the same behavior. All right, it can repeat the same behavior. So you having an order block in the same zone gives you what a higher what probability of the market going in your favor. All right, so now we have rejection area. Okay, it should be in a key zone. Okay, key zone means that rejection area, so it can be something like this, it can be something like this, it can be something like this. Okay, something like this. All right, like this. Okay, so since there are multiple rejection here, okay, it helps the price, okay, to repeat the same action here. Okay, it helps the price to repeat the same action at the right side. So if the price is coming, you have an order block, you have rejection, so you have solid what trust in the entry. All right, what else? So now we have three features. We have break of structure, we have momentum candle, we have rejection, and what else? The last feature is unmitigated. Okay, when you talk about unmitigated, it means that untouched. All right, if you find an order block here and the market touches it, or the previous candle, let's say this is a momentum candle, all right, the previous candle, okay, or the next candle, all right, touches the order block like this, okay, this means that the order block has been mitigated. All right, it means the order block has been mitigated, so it's no longer valid. Let's say you have the third candle from here, maybe touches it like this, okay, and push up. Now this order block has been mitigated and it's no longer valid. All right, if the price is coming back again, you don't have to trade it unless you are trading it as a support zone, but not as an order block. Now an order block is a price level where institutional traders has placed a large order, okay, either sell or buy, and that order causes a momentum or impulsive move in the market. All right, So impulsive move, how to see an impulsive move is a large candle, okay, with little to no wick. If you see a large candle, behind that large candle is an order block. That is where the institutional traders will place the order. All right. So if you see it, you have to treat it as a support zone or resistance zone. Okay. So what do? You demarcate the zone, or you demarcate the high and the low of the order block, or the candle. Okay. The high and the low of the candle, demarcate it and extend it to the extreme what? Right. All right. Extend it to extreme right. All right. So this zone is your key area. Now, what do? You need to wait for the price to come back to the zone. But first thing you need to check is to check that the order block is valid. And how do you see if the order block is valid? You need to see a break of structure. All right. You need to see a break of structure. Once you see a break of structure, all right, the next thing you need to check for is what? Is check the zone where the order block is found. All right? Is that zone a key zone? Okay, and I believe that you understand a key zone. Okay, a zone whereby there's multiple rejections of the price. All right, that is to give you a sense that if there's multiple rejection in the left side or at the left side of the chart, it can repeat the same attitude at the right side of the chart. Okay, that means if you place a trade here, the market will not just come here and evaluate it unless there's economic reason. Okay, the same way the market has rejected from here or has a multiple rejection from here, it's going to repeat the same behavior here. Okay, supporting your order block entry. Okay, and we said the next thing you need to also check is to check that the order block has not been mitigated. Okay, mitigation means that touching. Okay, the order block shouldn't be touched by any candle. If you find any candle touch the order block and move up, the order block ceases to be an order block or a valid order block. Okay, unless you are going to trade the zone as a support zone or resistance zone. Once you find your order block, now you've seen the first momentum candle order block is seen. Okay, so we have two features seen. Okay, we have what? Rejections here, a key zone here, which is supporting your order block. We have 3 confirmations. Okay, and order block has not been mitigated. So 4, you are good to go. Wait for the market to retrace. Okay. Okay, wait for the market to retrace. Once the market gets to the zone, make an entry directly. Okay. Sometimes if you are going to wait for confirmation, all right, for multiple rejection here, the price is going to leave you, and at the end of the day, you will be risking much. Why? Because some of the other block, okay, the market will come touch it immediately. Touch it is going to what? Push with a high momentum, okay, and close with something like this. All right. So when the price closes like this with this hammer, if you don't take it here, you are going to take it here, entry from here. All right, and then you need to put your stop loss behind the order block. All right, so from here to here is going to be your risk. That is why it is advisable to enter immediately once you find order block, everything is confirmed. All right, and make sure you are trading according to the trend of the market. Every entry you are making, make sure you are trading according to the trend of the market. That is going to be in your favor, right? But if you're trading against the trend of the market, all right, unless you know what you are doing, if you don't know what you're doing, trust me, you might be hitting stop losses. Okay, and one more thing, you don't have to put your stop loss behind or exactly where the order block ends. Okay, because below the order block here there's liquidity. I'm not going to explain that. I'll do that later. Okay, below the order block there's liquidity. Okay, so most cases the price comes down. Okay, trigger the liquidity here takes a lot of people out before moving to the upside. Okay, in most cases that's how an order block is. Okay, the market can respect the order block but come down all the way down to this side before moving to the upside. So what do you do whenever you are trading an order block? Make sure that you extend your stop loss. Okay, if you don't extend your stop loss below the order block, you are going to be the liquidity that the market needs. Okay, so it's very much important. All right, if this is understood, I'm going to wipe this out and then we'll do the sell side. Okay, we do the sell side. I told you we have with any strategy have buy, okay, or bullish side and the bearish side. All right, so the moment you understand one strategy, you have to apply the same knowledge to the other to the opposite strategy. Okay, so buy side order block, sell side order block, the same knowledge, but this time it is pushing down. If you are going for buy, okay, put your TP from the next before the next rejection. Okay, in other words, put your TP before the next resistance. Assuming I'm entering for buy here, okay, at this zone, where is the next resistance? This is the next resistance here. Okay, this is where the market was rejected. Okay, so where do I put my first TP? TP should be here, below. Okay, below it. All right, the next resistance is here, so TP should be what? Below it. All right, the next resistance is here, so TP should be what? Below it. Okay, the reason why TP should be below it is because the rejection here, it is possible to repeat the same action here. All right, when the price gets here, this rejection or this sellers might come here to fight the price again and force the price to push it down. Okay, so you put it before the rejection zone so that even if the price gets to the rejection zone and the price the sellers push it down, you have already taken your profit. Okay. All right, so you have to check the zones. If the zones is a threat, okay, if the zone is the rejection zones are threat to your the price or to your entry, what you need to do is to put your TP below it. All right, so let's check the sell side sell side order block. Okay, so first of all, what we need to check is what? A momentum candle. Okay, a momentum candle. A momentum candle, right? And we said before a momentum candle, the candle before that momentum candle becomes our order block, right? So the candle that caused the momentum candle is our order block. Sorry, undo. Okay. All right. So this becomes what? Our order block zone. Now, an order block should what? Break a structure, right? An order block should break a structure. You should see a break of structure somewhere here. BOS, right? What else? What else should we see? We should see what? We should see what market reacting. Okay? Market reacting in the zone. Okay? Or it should be in a key area. So this reaction here is going to support the order block. Okay? It simply tells you that when the market comes back to the zone, it's going to repeat the same behavior here. Okay? It's high probability that the price is going to repeat the same behavior at this side when the markets begin to retrace back to the order block zone. And what else? The order block shouldn't be mitigated. Okay? No candle should mitigate the order block zone. Okay? So assuming you have this candle, for instance, okay, this candle for instance, and this candle has already mitigated the order block zone with a wick. All right, this order block ceases to be an order block. All right, in other words, if you want to trade this zone, you don't have to trade it as an order block, but instead trade it as what? A resistance zone. Now, what I'm saying is that, okay, an order block is a price level whereby the institutional traders has placed a large orders. Okay, has placed a previous large orders. Okay, so this large orders, okay, causes a reaction in the market. Okay, and that reaction is called what? Impulsive move or momentum candle. All right. So anytime you see a momentum candle, the candlestick before that momentum candle is the order block. That is where the institutional traders place their order. Okay. Now this order acts as a support and resistance zone. All right, depending on where you find it. But after you find the order block, the next thing you need to look out for is a break of structure. Why? Because a break of structure signifies a direction. Okay. Break of structure signifies what? A direction. Okay, the interest of the market to move in that direction. Okay, so this means that since there's break of structure to the downside, it signifies that the market wants to move down. All right, so even if the market will begin to retrace up, All right. Since it has shown interest of moving down, this zone has the higher probability of pushing it down again. All right. That is why you need to see a break of structure. So that is it. Okay. So after you find your order block, okay, your break of structure, all right, order block is valid. All right. But to have a solid confirmation, you need to see what rejection around the order block zone. Where you find the order block, there should be rejection there. Okay, signifying that when the price retraces to that zone, okay, it's going to repeat the same behavior here. All right. Even if it's going to break the order block zone, it's not going to have it easy to break. Okay. The most painful thing about trading is that you actually find time, okay, waste time to make analysis and everything, and at the end of the day, market gets there and then just evaluate it in a few seconds, okay, and hit your stop loss. All right, it means that your work is nothing. All right, so you should place your entry at a zone where the market will find it difficult to hit your stop loss. All right, and these things are part of things that prevent the market from hitting your stop loss or fight the market from hitting your stop. And we said that an order block shouldn't be mitigated. So if you have an imbalance, what do you call it? A momentum candle here, okay? An order block should be mitigated or shouldn't be touched by any candle, okay? So if you see an order block whereby the next candle has touched it, let's say this candle, for instance, move to this side, and then maybe it touches the order block at this level, okay? So long as this has been mitigated at this level, this order block ceases to be order block, right? It's no longer an order block, okay? So if the price decides to come back again, okay, right? Even if you are going to trade the zone, you are not going to trade it as an order block zone. You are going to trade it as a resistance zone, if that is what you see, okay? Right. So if you are going to trade this, okay, if you want to trade this order block, make sure your stop loss is not just at where the order block ends, right? Other than that, the market is going to take it out. Why? Because this the what do you call it, the high of the order block, the candle, okay, the high of the candle of the order block, all right, is termed as liquidity. Okay, liquidity is there. So the market sometimes will what? Push up, okay, take the liquidity here, right, before pushing down. Okay, so make sure that your stop loss is far behind the order block, okay, far behind the order block, so that, or yeah, far behind the order block, so that the price don't take it out before moving in your direction. All right. Can the momentum candle have a wick? Exactly, it can have a wick, but it should have what? Little to no wick. Okay, little to no wick. It means that the wick can be there, but not that huge wick. Okay, signifies a rejection. Okay, right? Let's say you have something like this. Okay, this is not another block. Okay, or something like this. Or something like this. Okay, this is not an order block. All right, it's not an order block. Okay, but you can find an order block like this. You can find an order block like this, maybe like this. Okay, somewhere like this. Okay, right? Yeah, that is perfect. But once the wick crosses the order block, no, it's not an order block. Okay, so let's go to the chart. Let's go to the chart. I think we need to go to the chart. What did we talk about order block? Now I had confluences here which I'm not going to explain, okay, but I just want to talk about the order block side, okay? Now we said an order block should have, if you see a momentum candle, below that momentum candle there's an order block, okay? we found this momentum candle here. This candle, right, is a momentum candle. And after the momentum candle, the candlestick below the momentum candle is an order block. So where is our order block? This is our order block. This is an order block. And what do we talk about order block? We say an order block is a price level where the institutional traders has previously placed a large order. Okay, either buy or sell. But in this scenario, this is buy. Okay, so now this order calls this what? Momentum candle, right? And it signifies our order block. But we cannot call this an order block without seeing a break of structure, right? We cannot call it an order block, a valid order block, without seeing a break of structure. So first we saw our break of structure here, all right, making this a valid order block. So this break of structure here is telling us, or is confirming this order block. Okay, this break of structure here is signifying what? A bullish direction. Okay, it's telling us that the price is making an advance towards what? The upside. All right, so if the price is making an advance towards the upside, then this order block is a valid order block. In other words, even if the price retraces down, okay, the price has its direction what? Declared. The price has already declared its direction. So if it retraces down, it will still what? Push up. Okay, most of the time. Now this is our order block. Why? Because we have a confirmation here, which is break of structure. Okay, signifying what? Bullish direction. So now we have what? We have one, momentum candle. Two, we have a break of structure. Okay. Three, what is the next thing? We have what? A strong key area. This order block is found in a key area. Okay. This order block is found in a key area. What is the key area we talk about? We have the rejection here. We have this rejection here. This rejection here. We also have this rejections here. Do you see that? And I told you that whatever happened at the extreme left side of the chart, okay, has a higher potential of what? Repeating the same behavior. Okay? So since the price has been rejecting here several times, when the price gets here, it has the potential of rejecting from there, right? To support what? The order block. And look at what it did. Okay, I gave this entry in the community, price got here and whoa, boom, to the upside, this level, came down and then went to the upside, all right? So that is what it is, all right? And check this, it also repeat after rejecting from here, okay, respecting our entry, it came here and what? Repeated the same behavior, all right? So the zone of the order block is very much important, okay? Don't ignore it. Don't ignore it, I repeat, okay? Because this will support the order block, okay? Every entry you are making, make sure that you are placing your entry at a key zone whereby it will support your entry, all right? Like I said, if you place an entry and the market just get there and evaluate your entry, like it makes you feel useless, okay? It makes you feel bad. Why? Because it didn't even wait for you to even have the hope that it's going to go in your favor. Okay, just get there and swap you out. And I said an order block shouldn't be mitigated. Okay, so this order block is a clean order block. No candle from this side has touched it. Okay, no candle from this side has touched the order block. So it's very clean order block. So when I found this order block, I checked there's break of structure. Okay, there's what the order block is found in what? A key zone. All right. Order block is not mitigated, so what do? I have to wait for the price to retrace. So the price went all the way to this level and begin to retrace. Okay. Mind you, I told you I have other confluences. Okay. I had this liquidity, which I'm not going to explain. Okay. I had this liquidity, which I'm not going to explain. All right. So I'm going to tell you based on the other block, only the other block. So with this liquidity, I traded this order block. Okay, this is a confirmation, my own confirmation. All right. So look at what the price did. The price came here, respected the order block zone, and then what? Pushed up. This was the entry I gave in the community. For those who are in the community, you saw this entry this evening. If you see an order block without a break of structure, that order block is not a valid order block. Okay, it's not a valid order block, and you don't have to even consider it. All right. Why? Because a break of structure signifies a direction. Okay. So if there's an order block and the market is not signifying a direction to the to bullish or sell, why do you enter? Okay, break of structure happened from this level. All right, the second break of structure happened from this level. Okay, and I told you for market structure when I was telling you, when I was teaching you, I told you that when you see double break of structure, it signifies what? It confirms a direction. Okay, double break of structure. Okay, at least see two break of structures to signify the direction or to confirm the direction. Only way one break of structure is termed as what? Market structure shift. Okay, it's termed as market structure shift or change of character. Okay, until we see a second one to confirm a bullish direction, this does not confirm what? A direction. Okay, this it says it tells you that the market has an interest to change direction. Okay, which is market structure shift. Once you see break of structure supporting the change of character, it tells you that the market has showed a clear what? Direction. Right. So if you are making an entry according to the direction, you are not scared. Okay. After spotting your order block, okay, what you need to do is to place what? A limit order. Okay. Place a limit order. Don't even wait for confirmation. Place a limit order there. Provided the order block is valid. Okay. If the order block is valid, you find it in a key area, just place a limit order there. All right. Or pending order. After placing a pending order, all right, don't place your stop loss. Don't place your stop loss beneath, just beneath what? The order block. You will be making a very big mistake. Don't place it beneath the order block. You can extend the stop loss far below the order block. Okay, for your safety. The low of the order block is what? Liquidity. So most cases the price will push down. Okay, take the liquidity beneath. Okay, before pushing up. Okay, 85 to 90% of the time, that's what order block. That's how it happens on order block. Right. So once you place a trade on order block and you place your stop loss just beneath, let's say maybe 5 pips or 2 pips beneath the order block, you are going to be stop out. Okay, the market will come down, take you out before pushing in your direction. Let's see if you are going to get another order block. Check this. You have this order block here. Okay, do you see this? Do you see what I see? All right, so let me place this one here. Do you see what I see, guys? So after this momentum candle right here, we found this what? Order block. Okay, we found this order block, which I'm not going to explain more because I've already explained it. Okay, and we have this line here. Okay, this line here is a break of structure. Okay, you can see it here. Right, we have our BOS here. Right, signifying that the price has the interest of what? Pushing up. Okay, we have our break of structure here, signifying that the price has the interest of pushing up. Okay, right. So the market came down, right, to react on the order block. But check one thing here. We have this rejection right here. Okay, right, supporting this order block zone. Right. We also have this rejection right here. Okay, supporting this order block zone. All right, and this rejection right here. So this rejection here is supporting this order block, telling you that if the price comes to the order block, it will repeat the same behavior that it did at the extreme left side of the chart. Okay, it will repeat the same behavior. So look at what happened. The price came and it rejected it to the upside. So if you are placing an entry from this level, what do you have to do? You have to place your stop loss somewhere here. Okay, or somewhere behind this resistance. Okay, this rejection here. Okay, you have to place your stop loss somewhere behind this rejection here, so that even if the price disrespect this order block and come down here, okay, come down to this zone, this rejection here, okay, or this what support here will come here to find the price, okay? To come here to find the price and push the price up. Right. If you place your stop loss just below what the order block, you are gone. Okay, any large candle you see is an order block. Okay, so check this. We have this large candle here. We have this large candle here. Okay, this candle right here is an order block. Okay, it's an order block. Why was it disrespected? Okay, I wouldn't say it was disrespected because even here it pushed all the way to this level, which will give you like 80 pips. Okay, but this is not a valid order block. Why? Because after this order block, there is no break of structure. Okay, there's no break of structure here. Along this line, there's no break of structure. All right, so the price came down to this level, respected this order block instead, because this order block we have break of structure. Okay, signifying the price has a higher potential of pushing or showing an interest of pushing up.